Welcome, everyone, and thank you for joining today. My name is Ignacio, co-founder at HUBUC, a global platform that offers all building blocks to enable all kind of businesses across different industries to integrate financial services into their products, issue cards, accept payments, open bank accounts, and move money around the globe without no banking licenses. Of course, one contract, one API, and one single invoice. Thank you very much, Philippe, for joining today on our first fireside chat at HUBUC.
My pleasure. Hello.
Maybe, Philippe, you can let us know a little bit more about you and also, of course, your company.
So I'm, as you may have heard, due to my accent, I'm French. I'm the co-founder and CEO of Kantox. So Kantox is a fintech company. To make a long story short, we build software for businesses, usually large ones, to manage foreign currencies and in particular anything related to risk. We started in 2011, so we are, let's say, from the first wave of fintech companies. We are 120 employees in London and Barcelona, and we have raised close to $30 million of venture funding to date.
We believe that fintech is a word that it has been used in many contexts, and in the coming years has been used a lot. But regarding your experience, and you have told it, you have said it yourself, it's been for over a decade within the fintech industry. What is fintech for you?
That's a good question. I would say it has been misused a lot. So we started in 2011, and I would say that until 2014, maybe even 15, the word fintech was almost not used. So I remember when we started, we were not even really saying we were a fintech company, and we were not really using the word either us, neither in the press. We made a bit of investigation, and then we discovered that the first time that fintech was used as a word was in, I think, 72 or 3. And I think it was in Bank of New York when they started building a completely new banking mainframe, so an old school thing. And they used this word, which then completely disappeared. And I would say that in Europe, in probably then 15, 16, it started getting used quite a lot, but mainly by companies that were what I consider true fintech. So companies fundamentally new and that try to provide a much better product or service thanks to technology.
Of course, but in any case, we agree that at the end, the word fintech is acting as an umbrella for disruption. Yeah. Related in the financial service industry. How do you see that this fintech concept has been evolved, and then how now this new concept of embedding finance, which again last week I believe you wrote about it, right? Yeah. About how embedding finance is going to a little bit change the rules how we are interacting with those fintech capabilities. How do you see that evolving at this moment?
And more you start seeing a rebundling. So take maybe the best example is Revolut. Now you can have savings, you can have investment product, you can have cryptos, you can have many things. Probably you will have some kind of lending soon. I think you already have overdraft. So we start really seeing a rebundling. I don't think we'll come to the extreme of a bank, because the bank is retail, SME, capital market, so it's very, very broad. But at least in each segment, so let's say retail, for example, I really see a rebundling coming.
Yeah, that's very interesting, Philippe. And also I would like to ask our audience, because we've seen so far that most of you are already leveraging financial services as part of your product offering, or you're planning to do it very soon. But now, how do you see future of embedding finance, right? And we would like also to hear your opinion around that. Philippe, I fully agree with you, and we've seen also those brands like Uber launching Uber Pay, right? Like Apple now getting into the card space, right? Even Grab launching Grab Pay a few years ago, and now recently just launching services for SME banking. So I understand how those companies can start leveraging financial capabilities to drive more money. But then, how the customer perceive such a new product? Because at the end, what we are talking here, right, is to embed or making financial services, which can be a payment, a transfer, right, into a context, which is the context of the customer, right? You do not want your customer to leave your value chain or what he is doing at that moment with you. You do not want him to leave, right, your platform, your product, to then interact with his bank or with his card or whatever, right? So how do you see that this will also impact how we can see customers involved in our value chains as companies? We'll see more and more companies maybe trying to get better services through embedding finance, maybe trying to increase loyalty of also their customers. How do you see that? How's the impact for the end customer at the end?
It's a complex question because finance in the end is many things. So retail, SME, capital markets. So I understand your question is more focused on retail, if I can say it that way.
Yes.
And I always think that in the end, if you think about retail finance and yourself as a user, as a client, financial services is never something you really do because you want to do it. You basically have to do it to get access to something else. So when you go to a shop, to buy a product.
Yes.
If you could leave the shop without having to take your credit card or anything to pay, it would be amazing. So what Amazon is doing with their supermarkets in the US, where you basically go pick a product, you leave, and everything is basically scanned and paid automatically, so you don't need to stop really when you go out of the supermarket. So I would say it's always the same with finance, retail finance. If you can buy something without having to really physically do the payment, or if you can buy a house without having to go through the complexity of getting a mortgage, if you can the same buy a car and you don't have to go through all the process of the leasing, and all this kind of stuff, it's 10 times better. So if tomorrow, let's speak about, let's say, millennials, if they can buy and do anything and exchange anything through their phone without really having to connect to any online bank or similar, for them it's fantastic. If they can just pay their friend or move money with their friend through anything, Instagram, TikTok, but really without having to go to HSBC, BBVA or anything, it's a much better user experience. No one really enjoy the fact of paying at some point, or the fact of moving money, or the fact of asking for a credit. If all this can be completely embedded in the user experience and completely hidden, in the end, it's a much better user experience at a large sense. So I think this is really where the value of embedded finance in retail is. It's really completely involved in the process, in the customer experience, and as hidden as possible.
Yeah.
I see this is what makes all the difference.
Yeah. Of course. And it will really become contextual, right? And giving better user experience journey, right?
Yeah.
But when it comes to the B2B segment, because from what we have perceived at HUBUC is that, from an embedding finance perspective, of course, we act as a service partner for our customers. So as you said, at the end, the brands that we work with, they want to provide a better service, increase loyalty, even generate revenue, right, from financial services. But at the end, they do not want, right, to deal with regulation, integration with partners, compliance teams, card support, etc. Right? So there we saw a lot of possibilities as a platform that enable such a customer segment. But when it comes to B2B, we see that more and more use cases are being leveraged, like expense management, accounting management, right? Employee benefits. So we are perceiving that there are more and more companies that for the last 10, 15 years, they have been providing a specific service, and now they see how to embed a card into their processes, a payment card or a bank account or leveraging open banking capabilities like account aggregation or payments initiation, or even leveraging forex capabilities, right, to be able to convert money faster and cheaper. They see it as part of their value chain for the first time, and they are starting to embed such a product. So from your experience, where do you see developing the most at the B2B sector, such a trend of embedding finance?
This is a very complex question because, I mean, as you said, there is no limit in the number and scale of use cases. But to take a step back, in the end, if you take any business in any industry, their core business is in some way to have customers and sell product to these customers. And very often, before selling the product, you need to buy stuff from suppliers, assemble something, or even if it's a service. But in the end, you have clients, you provide something to your clients, and you are paid for that. And usually in a company, anything related to finance is the same way, something you have to do to make sure that you can focus on your core business. So today I was with one of our clients. They basically sell furnitures for gardens. So basically, to simplify, they buy a lot of products in China and they sell it in Europe in their marketplace. So their core business is, I buy up furniture in China and I sell it in Europe. To be able to do this and make money, their core business is to be basically good at sourcing product, good quality and good price, and to find customers in Europe and sell to them. But for this to happen, they need to pay customers in China. They need to pocket money from their own clients. They need to pay their employee. So they need to make the accounting. They need to manage expenses, so expense management, as you mentioned. But all this is something they have to do in some way by obligation to be able really to then make money from their core business. If all this can be, let's say, embedded and automated,
yes,
it's in the end a lot of value added for the company. Value added in the sense that it's probably cheaper, it's probably lower friction, it's eventually creating new revenue source. So if each time, for example, they send a purchase order to a supplier in China, the payment to the supplier is done automatically. If the accounting treatment from this purchase is done automatically, and then if they are able themselves to basically capture the money from their own clients thanks to open finance or direct debit, to give some example, it's exactly the same. It's a lot of processes that are completely integrated in the system, completely automated, in some way hidden or so much automated as they don't need that many people really to manage them. And in the end, it's more time and resources to focus on your core business, which is sourcing good products and finding the right customers that are keen to pay.
But then also, when it comes to the implementation, it should be easy, right?
Sure.
Because you're great. We have wanted to be transparent and very easy to make it as your own product, right? And automate it through an API. But then it comes the integration part, which when we launched HUBUC, we saw it as a huge pain in the industry, right? How we can start then integrating such a capability, right, as your own, and the possibilities that now platforms like us offer, that you can drag and drop, create your own workflows with no dependencies on where you are sending the money, right? No dependency on which IBAN do you want, if you want a local IBAN or you want to make an international transfer, right? We believe that also this capability of embedding finance should be together with a modularity capability, which at the end, the customer will be able very quickly, as he does with his current product, right? He will be able to tweak his fintech capabilities, right? And now maybe he will be issuing payments through a card, but maybe in a couple of years it's going to be a QR payment, right? Maybe now he's doing transfers through Swift, right, protocol, and maybe in a couple of years he will be doing push to card transfers, right, from card to card. So we believe that it's not only to make it transparent, right, for the customer to embed those capabilities, but they should be also modular, and of course they should be integrated from a managed perspective, right? You can quickly do that from this workflow drag and drop perspective. Philippe, so Kantox, you are your example of how a fintech can develop, right, through the years. How do you see this embedding finance trend applying to Kantox, right? And how do you see yourself also being part of this revolution for the coming years?
So in our case, we have done a significant evolution of the product, let's say 4 years ago. Before, let's say we were what we name pay-as-you-go solution for FX and international payments. So basically, a client was logging in on the platform and manually executing transactions, so like an online bank. And the big evolution we did is that we understood that some clients, and in particular the mid-size and large ones, were very much interested in completely automating the process. And when I speak of the process, I mean anything related to foreign currencies. So what we did is that we built an API that we connect to client systems, so usually an ERP like SAP or anything similar. And then all the transaction in foreign currencies, and in particular, future transactions, so for example, payments that have to be done in 1 month, 3 months, 6 months, are executed in a fully automated fashion. So the client doesn't connect anymore to our platform to manually execute the payment. It's completely automated. And the value there is that clients, they will first stop losing time to manually execute transaction. But on top of that, if you have a machine automating the transactions, risk is much better managed because, as you may know or know, exchange rates are very volatile. They change basically any second. So when you have a business with payments or revenue in days, weeks, or months, you never know the exchange rate you will get really at payment date. So what our machine is able to do is to manage the risk on all the future payments and to make sure that we secure your margin. And when you have a lot of small transactions, having someone doing this manually is almost impossible. But when you have a machine, I mean, the machine can manage hundreds of transactions a day, thousands a day. So it's much, much better, not only in terms of efficiency, but in terms of really risk management. And I think we are one use case, a very focused one, because it's only foreign currency management of embedded finance. Because again, it's the client ERPs that's speaking to our system through an API connection, and it's really a machine-to-machine execution, and without really humans involved anymore in the day-to-day.
Well, at the end, as Philippe mentioned, embedding finance is going to be one of the trends for the coming years. We believe that being an infrastructure provider that at the end, right, enables you with such a capacity to implement payments, cards, bank accounts, should not be directly linked with the regulatory risk that the customers have to then take, right, to issue such a product. How we do it? We partner with banks, with payment institutions, with institutions like Kantox as well, that at the end we are able to aggregate all those different fintechs within the industry that through HUBUC, then we can provide such a service. So at the end, our regulatory coverage is not coming from our license, like a licensed regulatory entity, but from all our marketplace of partners that brings their regulatory coverage. I think that was all for today, Philippe. I would just to say thank you for your time.
Thank you
with us. Wish you happy holidays because I guess coming 2 weeks it's going to be Christmas time, and let's hope that we'll be able to spend some time with the family despite of the situation. Because in Spain, I don't know in other parts of the world, but in Spain we still risk to spend some time with the family together. So let's see.
Thank you.
Okay.
Bye.
Bye, Philippe. Ciao.